$17 trillion of treasury bonds come due in the next 36 months. If you have to reissue them at 4%, you've got an arithmetic problem. In good times, we're running a deficit that is over 6% of GDP. So one way to look at it, if we had balanced the budget a year ago, nominal GDP, forget real, nominal GDP would be negative. So it's all debt.
So it's all debt.
So it's all debt. Debt. If we go to 12% of GDP, the deficit, and stay there, which is a big if, it might not happen, 80% of tax receipts will go to interest expense. That's impossible. That cannot happen. Maybe we got to worry about solvency. So higher for longer means bankruptcy. And so we're going to have to restructure our liabilities. That, I think, is the story of the next 5 years.
So real GDP on a year-over-year basis is running at 2.9%.
Can we be strong when 680,000 fewer people are working? Can we be strong when 640,000 people drop out the labor force? Is that the definition of a strong economy?
But real gross domestic income, GDI, is running at negative 0.2. We have never seen a gap in the national accounts between income and spending that large.
I'm starting to wonder if some of these numbers are even real anymore.
And what we know about history, once again, is that when we get a gap between GDI and GDP, GDP in the revisions converge on GDI. And I don't believe that Mother Nature died, and I don't believe that the business cycle has been repealed. The recession hasn't happened yet, therefore it's not going to happen, is like me saying in Toronto, you know what, it didn't snow in December, therefore, you know what, we're going to call winter off. Traditional lag from the start of the tightening cycle to the beginning of the recession that nobody ever believes is going to happen is 26 months. They started tightening in March of 2022. The recession is probably going to be happening in the next several months. 2000, soft landing. 2001, recession. 2007, soft landing. 2008, recession. It's part of the business cycle. We're going back towards the zero bound. I know people are thinking, no, that's not going to happen. They said that the last 3 cycles. All the fascinating information is in the household survey. Out of the 1.8 million, every single one of those jobs was in part-time, self-employment, and people taking on more than one job. But that's telling you that there is a lot of stress at the margin. But the Fed is paying attention to what business contacts are telling them. 2/3 of the Federal Reserve districts, there's 12 of them, 2/3 are either contracting or stagnating.
Once you add leisure and hospitality, you get to 81% of the jobs created in the last 12 months. 81% to non-productive, low-income paying jobs. As far as high-income paying, what we would consider to be white-collar professions, -1%. And that's through December 2023. Why are household delinquencies so high with the unemployment rate so low? And you fill in the blank with the fact that there's not a lot of income generation right now in the U.S. economy.
But the household survey peaked in April in terms of employment, and there are 2 million fewer jobs now. You might posit the idea that they intentionally make up the number to tout how strong the jobs market is. And then lo and behold, it gets revised very substantially lower.
And when it gets revised, the revision is right next to the obituaries when you look in the paper. Oh, there's a real number. Oh, I didn't know Pete died. I thought he was already dead.
The vast majority of historical indicators suggest that recession is more likely than not, to my eye, in 2024. Like, I remember I turned negative on the housing market in about 2005. And it stayed really strong for a few more years. Everything takes longer than you think, and everything goes further than you think. I mean, M2 is down, and it was negative year over year all of 2023, but it's still way above trend if you go back to the trend of M2, which was growing at a pretty steady level, and then all of a sudden all that money comes in, and now it's been falling. But at the rate it's been falling during 2023, it'll take more than a year, maybe even 2 years, for the M2 level to get back to that trend line. And I think that has something to do with why this is such a protracted process. The beginning of layoffs. BlackRock this week announced laying off 3% of its workforce. Is you get to a point where it's okay to lay people off because everybody else is doing it. One of the themes of 2024 will be layoffs.
And they would be selling things, selling blue jeans, and then they take the money and go across the street to the guy selling records at the record store. Then that person would take the money and go to the restaurant across the street. The circulation of money, the velocity of money stayed in the community, but they were crazy. They were begging. We want these big chains to come in. Okay, here comes H&M. You give them your money, they send it over to Europe. No velocity of money, no velocity. And I think it's gotten a lot worse with the internet. But
I mean, let the money circulate, right?
let it circulate, right? Let it touch a few hands before, before Jeff gets it all.
Yeah.
No, the IRS gets it all.
Yeah.
Buy it for your grandchildren's college fund, the Indian equity ETF, and don't worry about it because it's going to go up. It's going to be a 10-bagger, just like it's exactly where China was 30, 35 years ago.
We've been bullish in India for the past several years. I pay attention to valuations. They are not timing devices, they are expected return devices. Stocks are way more expensive than bonds are. And today's level of the multiple makes you comfortable. On a relative basis, the 10-year note would have to be 1%. It's very interesting, the things happening beneath the veneer of these headline retail sales number. Tectonic shifts are taking place. And this guy, who's typically pretty bullish, said the consumer recession is actually starting now. Okay, so in recessions, earnings go down 20 to 30%. Consensus is plus 11. I would say to be in the parts of the US stock market that are correlated with lower interest rates. So you're talking telecom, you're talking utilities. You could be even talking about selective REITs.
George Box, who famously said, all models are wrong, but some are useful.